What's up, beautiful people? This is Pope with Docta Trading. I want to let you guys know that anytime you have a question or comment or want to know what's going on with anything specific in the market, let me know. I'll make a video about it. If I have the time and the bandwidth to do it, I'll make a video about it. So today I got a comment from Ryan, longtime subscriber, who was asking me, can you explain what the pump was about today? I thought it would tank but today the banks pumped and SPY pumped all day long, which he's right. You can take a look at the charts right here and you'll see basically, it just fired up in the morning, full of surety and goodwill and faith to all, and it just stayed there and just rode its way out. All right, so it's a good question. I have to admit that the way I was thinking about it as well, I was thinking on the put side, and a lot of the market was as well. So maybe that's a little bit to do with it. So first off, let's start with a narrative. Let's see what mainstream media thinks and what they're saying about it. So took a look at Forbes article right here. And the first takeaway that they have is its retail sales. Investor sentiment got a boost from Commerce Department data showing the retail sales jumped 1% in June as consumers spent more on a wide range of goods, everything from food to gas, despite inflation recently hitting a 4-decade high. That's the headline retail sales number. Went from negative 0.3 to just 0 flat, and that's what's excluding food and gas. So I don't know what chain they're yanking right here, but that's not exactly what it is. Okay, so we also have Wells Fargo, who had their earnings today. They missed earnings. They went down. Citigroup, Jamie Dimon's old firm, for whatever reason, they hit their earnings. And they did well. So that's when you hear this report of mixed bank earnings is why the banks went up. So we already know that we came back from underwhelming results yesterday from Morgan Stanley and JP Morgan. And truthfully, amongst all of these narratives, the one that they're going to go with the most is that it had to do with retail sales. So one of the things they say here is, given the strong retail sales report, the U.S. may actually post positive growth figures in Q2 to avoid the 2 consecutive quarters of negative growth, says Jeffrey Roach, chief economist at LPL Financial. The Fed could try to use this data to support a larger than expected hike later this month, he says, adding that if the consumer is stable enough, the Fed could indeed implement a larger hike without breaking the economy, says Senor Roach. All right, so that's what they're going on. They're saying the retail sales numbers are what's doing it, and that's why we had the pump today. The only thing from this information I think might be slightly true is that when JP Morgan and Morgan Stanley posted their bad earnings yesterday, it took all the banks down pretty heavily. That was for the way that they trade in the 1% range, 1.5% range up or down on any given day. To have that kind of pull down and then have any sort of more than just absolute negative news from bank earnings, which is really Citigroup, buoying this entire banking sector, that brought Bank of America up. That brought JP Morgan back from the shutters. That brought Credit Suisse was down, I believe. But, PNC did fine with it. Wells Fargo had bad earnings, but still was in the positive. So the banking sector took such a hit yesterday from the CPI data the day before, from the PPI data of that day, and from the earnings results of JP Morgan and Morgan Stanley, that you could say that there was a little bit of some bounce room there, some rally room in the banking sector. So to the first part of your question, Ryan, to the banking sector, that's why I think why. SPY kind of speaks to an overall kind of market sentiment that's going on right here, right now. So, as we went through these different headlines, trying to, get any answers, see what they're trying to say that it is. Bloomberg's not saying anything. The Fed's heads towards a 75 basis point hike with officials wary of more. Yes, they're thinking about 1%. And normally I would say it's going to be 75 basis points, and there's doubtful it's going to be 1%. But ever since the Fed changed course from 50 basis points to 75, now anything, it's a guessing game, whatever they do. A bad inflation print means they very well could go for 1%. They could even go higher. So no one knows at this point. It's really speculation. I mean, the best guess is 75 to 100 basis points for that change. But nonetheless, I think when we get over to the Wall Street Journal, just scanning for mainstream narrative for what was going on here, you don't really see much, right? It says, it says stocks rise on retail spending data, like we mentioned before. But then all of a sudden you have market downturn weighs on Wells Fargo's profits. Citigroup's earnings drop, but they surged anyway, just because they showed upside on their deposit downdraft, and that's what's hilarious there. But then I see this little hidden article right down here. It says stock investors have rarely been this bearish. All right, and so now we're at the narrative of why the SPY popped today. And this goes back to what we're always going to be talking about is liquidity sweeps. When we have 85 to 90% of the market is being traded in an algorithmic, high-frequency trading fashion, do we really think it's always fear, uncertainty, and doubt, and a bunch of people sitting around going, ooh, bullish, buy the dip, and that's what's affecting the market? No, the machines are running the market, right? And what did the machines see when they woke up today? Well, other than, bank earnings and inflation on traders' minds, which I'm sure they don't care about, and I think really what they see is the open interest on the derivatives market. There's a lot less transparency on the derivatives market, so hey, a lot more wiggle room to get a little jiggy with the pricey, right? And what I think we're gonna really learn from this channel, hopefully, is that there's really, the market price is a staged event. Let's say it's a theater. And it's a theater just like a movie meant to react emotion, whether it's positive or negative emotion at any given time. And that price that we're seeing on the screen isn't really relevant to the market profits and who's making the money. What it is the derivatives market. So when we see open interest at 11 million versus 11.3 million versus 7.3 million on the call interest, calls being bullish, puts being bearish, we can see that it was a 1.5 put to call ratio in favor of the SPY going down today. And so there's not really a big problem for several institutions to inject a lot of money into the underlying funds of the security that is the SPY, following the S&P 500, Standard & Poor, getting more standard, getting more poor as each day goes on, and just basically sweep out all the people that are trading puts. They bought these puts, they fell way out of the money. There was a lot of actual volume in the put section. It was mostly selling. I think that's why. All right, so thank you, Ryan. I wanted to be quick with it, break down what it was. It's the first time me doing one of those kind of ask me anything, which I think is a stupid phrase. I'm never going to call it ask me anything. If I do, call me out. I'm only using keywords to get more people to pay attention, but no, I don't like that ask me anything, because you just cannot ask me anything. You can ask me most things, or you cannot ask me anything. That's ridiculous. I don't know you like that yet. Maybe someday we'll talk about it. All right, people. Thanks a lot for following along. It's my first comment review, like I was saying, so I will be getting better at every one of these things as I go, but Jesus, you just gotta warm up and get to it. Ryan, thanks for your shout out. Thanks for your good words, my brother, and thanks for the good question. Everybody like, comment, subscribe. If you subscribe and you comment, you ask me a question, I will answer it if I possibly, in my own physical realm of power, can do so. All right, beautiful people. Keep on block rocking. More videos to come your way. Don't get yourselves in too much trouble out there now. It's a bear market, remember.
For the record, I'm done trying to make y'all comfortable. For the record, you ain't trying to grow, then it's done for you. For the record, lab on me going all the way. For the record, ain't trying to link, no time to waste. For the record.